Well, g'day there, everybody. Thanks a lot for joining me on this Thursday afternoon market recap. It has been that of an explosive move, at least for the Dow Jones Industrial Average during today's session. You can see in the top right-hand corner of my screen, and we did close up approximately 250 points, a rather strong session, and we have now just closed at fresh new all-time highs on the Industrial Average. So a big congratulations on the Dow achieving that milestone. It is the last of the three markets to achieve just that. And really the reason for this Thursday aftermarket recap is just to explain to you what you should be looking for if you find yourself wanting, all right, to jump into a bunch of bullish trades or even potentially looking to jump into a bunch of bearish trades. As counterintuitive as what that may seem, there is a simple checklist that you should be looking for before enacting such positions. Really what we have at the moment is a non-committal market. We've got some markets, or at least the Dow and the S&P 500 at new all-time highs, whereas the NASDAQ still has yet to significantly push above that rising trend line. Hence, why these markets are still rather bifurcated. And when they are bifurcated, generally it is best to stay on the sidelines until we get clearer directional sort of uniformity between the markets themselves. So as at this Thursday afternoon market recap, I'm going to go through a very essential sort of checklist that you must, or generally you should wait for before jumping into either directional types of movements when it comes to individual stocks and also directional plays on the indices themselves. So without further ado, let's jump into the industrial average. You can see over the past three sessions, it does look as though we are printing that of sort of a three white soldier type of candlestick continuation pattern. Now, this isn't a textbook pattern, or at least these candlesticks do not really surmise that of three white soldiers. We do have pronounced upper wicks in all three of these candlesticks, but it does take the general formation. What makes this even more interesting at this time is that during yesterday's session, and I spoke about this on Wednesday, was that we did definitively close the gap at 26,435. What you should expect on the Dow Jones Industrial Average, even after this sort of continuational move on Thursday, is resistance to hold, even if it is short term, i.e. you should see a down day on the industrial average, most likely on Friday, given the last day of the trading week. The reason for that is because, one, we do have that gap between Thursday and Friday, but this area, or more importantly, this area at 26,435 is very similar, right, to a psychological round number. Now, although it isn't a psychological round number, it's not 26,000, nor is it 27,000. It's all different numbers to make up, of course, 26,435. This in and of itself, or at least the true lesson from psychological round numbers, is applicable to this figure just here. So if you cast your mind back to at least the analysis on Amazon most recently, around that 2,000 whole number, we overshot it all the way up to about $2,050 per share. However, it wasn't until a couple of sessions after where we started to print those engulfing candlesticks, and really even since that 2,000 print and three consecutive holds above that area, as at the close today, we're still printing at 1,944. It's a tremendously valuable lesson that you can apply to the Dow Jones Industrial Average. And the context for this is because we are revisiting such an important gap that we established all the way back in the month of January. So essentially, if you are buying this market at the moment, one, I just wanted to point out that we are rather bifurcated across the markets. The S&P 500 has established that of a new all-time high, whereas the NASDAQ is still yet to break out above its swing high from a couple of weeks ago, and we are still testing that significant upper trend line, which is very important for the health of tech moving forward. So if I continue with this analysis anyway, we do have the gap. We have the open window, we've closed the gap. This right here is probably just pure speculation. What we've seen today during Thursday is that of pure speculation. I'm not in any diamond positions to the upside yet, not until I see market confirmation. When I go into the S&P 500, you can see again very similarly that we do have an open window that has set up between Wednesday and of course Thursday. So this window is now going to be filled moving forward. It may not come tomorrow being Friday, but you should see this closed prior to any significant move or continuation to the upside. And my major contention right now on these equity indices is the non-committal state of the NASDAQ. This is very troubling to me. The reason for that is because we've gone through the simple trademarks of a back test of this support, but at the same time, we haven't taken out the swing high. This is after a market which of course has been rather overbought for a prolonged period of time, and it is looking very fragile and weak based on a bunch of those oscillating indicators. If we fail to really get true traction and commitment above 8,137, again, risk essentially is off or could very quickly shift to off in the event that we see a very sudden reversal take place in the NASDAQ. I'm not completely writing that off. And really the keys to this market, if I could just surmise this into about one or two sentences, is that if you are looking to trade bullish, be very careful. And in my own personal opinion, I would wait until the NASDAQ confirms the breakout that we have just seen in the S&P 500 and that of the Dow Jones Industrial Average. The Dow Jones, again, think of it as that psychological round number that we've essentially just overshot as at the close of Thursday's session. And we should see, all right, selling pressure more or less around these all-time highs, which is going to dictate what is essentially going to happen on the NASDAQ, whether or not it can shift above 8,137 up here, or whether or not we start to take out this little swing low range that we've established for the majority of September. Now, as I say this as well, we're seeing yields on the long end of the curve really explode. If I can bring up the right chart here, let me just show you the picture of TNX. This is the 10-year Treasury note. And you can see really since the midpoint of August, we've moved from 28 or 2.8% as the yield all the way up to over 3%. Now, this is problematic moving forward as yields are rising. Obviously, the bonds themselves are crashing. And one thing that may actually slow this equity market rise is the flows from equities into the bond market to sort of hold up some of these falls that we're seeing in the actual bond prices themselves. So think about the liquidity flows from equities into the bond market to offset these spiking yields that we're seeing not only on the 10-year, but also on the 30-year. And if I go into the short end of the curve as well, if I can bring up the right chart here, you can see the 2-year note, which really hasn't gone through that of a prolonged sort of pullback like the 10-year did into the month of August. It's just continuing to move up. Now, as we see this, I can't really compare and contrast this on my screen at the moment, but if you were to look up the actual the spread on the 2 and 10-year, that is blown out over the past week or so too. I do believe we are printing now at 0.27, or from the cyclical lows. Let me just write this down. We're printing at 27 roughly at the moment, or from the cyclical lows of 0.18 1 to 2 weeks ago. So pay attention to the bond market. It isn't really a true sort of confirmational intermarket analysis that we look at when it comes to just simply equity prices, but those rising yields are going to be certainly problematic for the equity markets, especially if you see the liquidity flows back into bond prices, which will essentially have a sort of a contra effect on the equity markets as well. I can certainly see that happening based off this analysis, or just looking at where these three primary sort of market indices are. Now, again, just to show you this too, I can bring up the Russell 2000. The Russell has been sort of flatlining around this predefined area of support and resistance. You can see that we have a long day sort of Morobozu, a white bullish Morobozu candlestick, up 17.2 points today. We still have generally a target that we could run up and hit. My target has been here for quite some time, 1,756, but consider this extreme resistance if in fact we do gallop on up a little bit further. So again, these markets are painting that of a similar story, and really what you should be doing right now is protecting yourself, or at least giving yourself criteria, i.e. market confirmation between that of the Dow, the S&P, and the NASDAQ, which is yet to confirm, before jumping into a bunch of individual trades. There is a lot of risk in this market at the moment, even though you see the headline print of the Dow Jones Industrial Average up over 250 points today. This may be coming right at the very end of what has been a cyclical type of process to close this gap, and now, of course, the blow-off type of pop, which is now just printed a fresh new all-time high on the Dow Jones Industrial Average. I've got no problem whatsoever, just to put it out there, of trading long. In fact, really the majority of our trades for the past number of months, even going back as far as both March and April, have been long orientated. We have been long in this market for a number of months, but at the same time now, as the majority of market participants are starting to feel comfortable and relaxed about entering into the market long up at these new all-time highs, this is where we're sitting back as active market participants, really giving ourselves, again, serious criteria to stop us from doing some rather foolish things potentially if you are expecting this equity market just to gallop above 26,684, hold this level and continue. I'm all for it if it chooses to do that. However, what is limiting me at the moment is that of the NASDAQ not giving us that last confirmation that we are expecting to see. Now, as I go through this in our top 12 individual trade list, you can see this also. This is the chart of Apple. Apple is still yet to reclaim its all-time highs. In fact, what looks to be happening is we're establishing 3 lower peaks. And with that, if you just look at the candlesticks, just count the number of upper wicks we have on candles, let alone the sort of gravestone dojis, the perfect dojis, and those of the pseudo spinning tops as well. This is all in synchronicity with a lot of these oscillators resetting, and the MACD, most importantly, is still yet to register that of the bullish uptick as well. If I continue with Amazon, very similar type of picture. We're still selling off. We're still moving bearish in this picture, and until we reclaim the highs, we're more or less sitting on our hands at the moment. And it is a very, very intelligent thing to be doing, given the non-committal state of the markets. Now, Boeing Airlines is something that I've been keeping very close attention to. We are right back at that central pivot, or that top pivot, at about 370. We actually overshot my 360 mark, which is great. Doesn't bother me whatsoever. Yesterday, we got that first signal of a shooting star type of candlestick. This is a early reversal candle. So Boeing Airlines essentially is primed for a reversal. It doesn't have to do this, but if we start cracking below 351, heck, I can move this up even higher at the moment, move it up to below this little wick and this little wick here at 353. Okay, it's a very nice trade, essentially, to take us all the way back down to 325. As crazy as that may sound, it really isn't if you begin to see, of course, weakness on the equity markets as well. And we're just going to have to pay very close attention to that as we move into Friday's session, but also, more importantly, into next week as well. Baidu appears to be actually putting in that of a double bottom reversal. We've got a W here for winner, which is favorable for short-term sort of equity movements. It looks as though we are finally trying to close this window at 245.76. I don't have a vested position in Baidu at the moment, more or less liquidated out of that after I started to see a lot of the sort of dodgy price action along with the shaky equity markets as they drifted higher. But if you are still in this, I would encourage you to begin liquidating. If not, if you haven't already done so, out of this individual stock. We do have a pretty decent target at 245, as we first alluded to, at 222 and 226, and even that first area of resistance at 238 as well. So that's looking all right. I wouldn't call it a true double bottom because it's not showing up in the right location. This was our essential trade setup on Caterpillar. We were long at 137, long at 141, and this was a dashed line because of the state of the equity indices at 144.14. It took a little bit longer than what I envisioned it would, but you can see today it's absolutely rocketed to the upside. Now, I wanted to say, much like the Dow Jones Industrial Average, this type of angle of ascent, okay, it's unsustainable. And what you've seen in the Industrial Average over the past 3 sessions is unsustainable as well. So if I take you back into Caterpillar, finally we have closed these gaps. This takes us all the way back to June 2018. But at the same time, what this is looking to be right here is that of an exhaustion gap. So don't feel like you're obligated to actually jump into Caterpillar long. That is precisely the most incorrect thing to be doing. We are back at this resistance area, and this has been that natural sort of oscillation off from that of the rising bullish trend line that has been in effect on Caterpillar since 2016. This is the weekly chart, and you can see that long, lower pronounced wick just here tagging that rising trend line, and now you can see that explosive move off from that support. That is what we were talking about and looking for. Now, some of us liquidated the position during this, including myself. I wish I didn't in retrospect, but it's okay. It's acting as we believed it would, much like our understanding of the equity markets, even if they have, or at least the Dow has overshot that resistance area. So pay attention to this. This could be another trade on the cards, but I will say that this should close and it should take us back down to 152 over the coming sessions. And it does look like sort of an unsustainable blow off type of market move that we saw during today's session. We've got COP back up at the all-time highs. You can see that we've got a couple of candlesticks of indecision. We have almost that of a shooting star on Tuesday, sort of an ordinary day bullish candlestick on Wednesday, and that of a high wave spinning top as at the print today. So, I mean, this has been a prime short for quite some time, very similar to our analysis on Boeing Airlines and even potentially Apple and Amazon if we start to break below those critical areas of support. But when it comes to COP, I'm still not looking to actually jump into this long. Okay, I'm really sort of refraining from doing so, much like a bunch of other trades. And the reason for that is because of, again, the bifurcated state of these markets. It's very important to go long only once they are in that of established upper trend breakouts. And really what we have at the moment is a non-committal state across the board, even as at the print on Thursday. So it is looking quite good on surface value. I can make the argument. You can see that we're holding up above the rising long-term simple moving averages. You can see we're holding up above the exponential moving averages. Oscillators are beginning to sort of form, or at least become a little stretched. And in the face of this, as we've been making a series of higher highs, albeit very sort of temporary higher highs, you can see that on the MACD, we've got certainly a little bit of divergence happening across the board. So COP, I'm staying away from this and actually looking for reversal candlesticks like we're starting to see on Boeing Airlines. All right, I wouldn't be surprised to see these equity markets, as contra as this may sound, to actually shake up, stir up, and really confuse a bunch of people if we were to see a little bit of weakness flow into the market on Friday and also continue into next week. We've got CVX, which appears to be printing that of a really large bear flag. I mean, it's starting to really break down. We haven't necessarily called this a bear flag. It's taken somewhat of the same formation as what we saw towards the second end or the second half of August over here. If I can bring up my mouse, you can see just here, before we saw the continuation, we had our targets down here at 115.01, and really we've been letting this essentially set because we have been overbought. If I can show you this very quickly, you can see these oscillators have moved out of oversold conditions, and we've been waiting for this bounce to take us up to about 120. That was our target, much like our upper target on Boeing Airlines, up around that 370 pivot, which it's overshot, or 360, which was our target, but it's gone up to 370. Right now is the critical time for a bunch of shares, including CVX. What CVX does here is very important. The reason I say that is because this support is now resistance, technically speaking. And if you are to see weakness, weakness should show up more or less where we're currently trading as at Thursday. So if we are to see a continuation below the lows in the month of September, this is essentially where it's going to begin from. So pay attention to CVX. Although it's too aggressive to place an entry now, a lot of this is going to be dictated by the way these general markets move over the coming days, if not weeks. But you can certainly see how this is starting to form together. Now, Google has been oversold. It's starting to see that natural sort of recalibration, or at least a bounce off out of that oversold conditions. This is expected, but at the same time, tech remains relatively weak. We could be essentially setting up the retest, or at least the back test of support turn resistance. So I wouldn't be looking to trade Google long, but I would have a contingency order now set below 1,157. And the contingency is going to be on the NASDAQ breaking that intermediate bullish trend line on the actual composite index itself. Okay, so Google, watch from the sidelines. But if you start to see weakness in the NASDAQ, these tech companies are going to get belted. They're going to get hit, and they're going to get hit very hard. So don't let it be a surprise to you if you do see this play out over the coming weeks. IBM sort of fits into the category of Caterpillar. You can see it's naturally adjusted. It took a little bit longer. Again, we were looking at 146, 147. We sort of just moved sideways for about 2 weeks, but now the pressure cooker is essentially popping, and price action is moving accordingly. You can see it hit 150.93. Technically, this could move up to 155, again, contingent on the equity markets. I wouldn't be chasing this whatsoever. The true positioning was down here at lower prices on the swing trade outlook. And if you're not in this, I wouldn't be gravitating, or at least trying to force myself into a bunch of bullish trades. I would be doing rather quite the opposite at this time. If I go into Netflix as well, you can see it's simply just holding up around this 370 pivot. We're trading at 365.36. If we start to see weakness again, this has got the perfect sort of setup for a short moving forward into the month of October. At the same time, it can move a little bit higher up to 392. But again, this has come with a lot of volatility, and it's been a little bit of a wild ride. Most of the people liquidated their trades at 366. That was from the entry at 328. So they captured this little move here, and pretty much we're unchanged since then, except we have seen a little bit of volatility. I wouldn't be jumping into Netflix at this point. It is still rather undecided. And I think the biggest trade moving forward, or one of the biggest trade opportunities, is going to be Tesla to the downside if we see the equities roll. Below 277.10, this can become a hard default line, which I'm changing. This is the first change from the dash default line. The reason for that, one, we still don't have market confirmation. Let me just put this to default. But two, we've now got that lower wick, which is essentially becomes the structure. And once this area breaks at about 274.70, you're going to see the floodgates open on Tesla, and this thing is just going to plummet south if we see price confirmation below this area. And this entry here at 274.70 is contingent, okay, much like a lot of these tech companies, it's contingent on the NASDAQ failing, first of all, below 8137. This is the criteria, ... failing below 8137, and then breaking below the rising trend line and the support area here. If you see this on the NASDAQ at 7789, all of these tech companies are going to get hit. All right. And again, just to sort of sum up my narrative as at Thursday is, look, it's really easy to get carried away with the bullish commitment of what we've seen on the Dow over the last 3 days. Yes. But a lot of people are failing to understand just how significant this 26,435 area is. It's not, I guess, unexpected to see equity markets continue above certain resistance areas short term or temporarily. But eventually, sooner rather than later, reality will come. Just like it did for Amazon, you can go through and have a look at a bunch of stocks that hit that psychological round number and then ultimately push back down below it prior to seeing that true directional commitment. And I just really wanted to sort of surmise that as at the close on Thursday. So if you have any questions, please email me, success@pivotpoint-trading.com. Until next time, everyone, enjoy your evening, and I'll see you over the weekend in Pivot Point Pro. All right, all the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.